Okay, I've been waiting for this article to come out. We had an article come out today from the Fed Reserve, and basically the headline reads this: Meme stocks equals systemic risk. So again, I have been waiting for this. I believe that the whole time this year, volume has been gamed, not only on the charts, but as a whole. The Fed warns of social media echo chambers that pump up meme stocks. No, no, no. By the way, nice timing, 420. So this is the narrative. Retail causes volatility. Stocks that experience major volatility as a result of social media attention, often called meme stocks, have not threatened broader financial stability so far, but could open the door to vulnerabilities, the Fed Reserve said in a new report. The Fed's twice yearly update on America's financial system included a special section on the meme stock phenomenon. It attributed the trend in which attention on Twitter, Reddit, and other platforms encourages rapid inflows into or out of buzzy stocks to new trading technologies, including mobile apps, and to changing demographics as younger people enter the retail trading market. That is not at all what's happening. As we all know, what's really going on is that the attention on Twitter, Reddit, and everywhere else is bots, because we all know that back in January, what flooded Twitter, Reddit, and other social media? Bots did. Why? Likely to create the illusion of volume. Now, we also have the meme stock phenomenon. I think you mean institutions. They're the ones that coined the meme stock. They're the ones that are in the meme stock. They're the ones that were in GameStop. 200% of ownership, which was not mentioned at all by Gary Gensler, because that would take, again, the light off the issue being pressed that the problem has always been retail. I don't think so. The volume was never retail. Change my mind. The social media buzz was never retail. Please change my mind, somebody. Let's just look back at January through March real quick and look at some of the minuscule amounts of data we have available to look at. And we all know it's just a sliver of the whole pie. But hey, we're retail, so we can only see a sliver of the pie. That's why it's easy for us to get blamed for shit. So, looking at this information here, I have pulled all of the 13F data and I have taken the autistic amount of time to verify this is all accurate on Sec Edgar. And what I've noticed is between January 4th and the 31st of March, 65 million shares were purchased through the market by institutions. That's literally basically the float. Now, what's interesting, 2 days is when the most of these were purchased. And then we see volume drop significantly. 212 and 216, okay? Just in February and March, we had a total of 110 million shares purchased. So now let's look at the volume of GME during this time. We had 1.261 billion total volume in January, 827 million or 827 in February. Let me start that over. Jesus. 1.26 billion in January, 827 million in February, and 679 million volume in March. Now, if you take the average share price, if you look at the historical closes for GameStop and you average the price, that means during these three separate time periods, we have an average price of 79.62 for January, 71.56 for February, and 188.295, or might as well just say 188.3 in March. Now, if you do the math, 100.4 billion was spent in January, 59.2 billion was spent in February, and 127.9 billion were spent in March. Okay? So the question is, how can we figure out how much volume was really retail out of this picture here? Well, the problem is we can't, but we do have a few things at our disposal that we can use. The information we can see, we can subtract from this number. So let's do that. So total, we're looking at 287 billion, 593 million, $790,762 spent during the period of time, January through March, as far as what we can see. Remember, GameStop already had 200% institutional ownership at the beginning of this year, or double the amount of shares outstanding. Roughly 150 million were owned by institutions at this point in time. So if we look at the data we have available, we can see that just using systematic internalizer data alone, GameStop was traded $4.7 billion between the months of January 4th and March 31st, 2021. We can also tell that by averaging the institutional buys that we just looked at, we can tell that in the months between January and March, we had a total of $7.6 billion spent. That totals to about 12.75 billion if you add these two up. This is only what's reported and doesn't include sells from institutions. So volume counts both ways. You get buys, you get sells. We don't ever really get to see the sell side. This doesn't include all the naked shorting costs. This doesn't include all of the borrowing costs. So my question is this: how much of the volume in January was really retail? Remember, Gensler's blaming retail. The Fed's blaming retail. Wall Street and their media operations are blaming retail. And it's always been that way since January. They've infiltrated our social media. They've infiltrated our Twitter, our Reddits, everything else, obviously, as we have people denying documentation at this point. So the question remains, how much of the volume was really retail? And sure, the tweet from Elon Musk, if you go just look at the metrics in that, they don't add up. Look at the metrics in Wall Street Bets, they don't add up. Look at the comment metrics on Twitter during that time. It does not add up. None of this is adding up. To cover up, they're doing this to cover up, in fact, that it was institutions this whole time and GameStop insiders like Ryan Cohen. Ryan Cohen likely started the scramble to get everyone out because as soon as he bought up those 9 million shares, something changed. And scramble time started in October of 2020 when Citadel and friends took all their positions. So the buying happened in 2020. So what was 2021? Remember, volume comes in two different ways. It comes from buying and selling. Food for thought, everyone, but none of it adds up. None of it does. An Elon Musk tweet on the day GameStop had its daily high or yearly high or all-time high was the perfect excuse for retail volume. Oh, Elon Musk tweeted, look at all these retailers that were mainly bot-driven that drive the stock up. We can blame retail now. It's a psyop operation, always has been.